Welcome to the Tearsheet podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zack Miller. And while co-branded credit cards have dominated consumer wallets for decades, a new frontier is emerging in the payments landscape. Co-branded debit cards represent an untapped opportunity for brands to deepen customer relationships while addressing the preferences of a generation that increasingly chooses debit over credit. Joining me today is Derek White, CEO of Galileo Financial Technologies. Derek has been a pioneer in digital banking and financial technologies for more than 2 decades, having helped launch the world's first online bank before transitioning to help numerous organizations and financial institutions modernize their systems and evolve their customer service approaches. And prior to joining Galileo, Derek served as Vice President of Global Financial Services at Google Cloud and held executive roles at US Bank, BBVA, and Barclays. He brings unique insights from his experience across traditional banking, big tech, and fintech infrastructure. Under his leadership, Galileo recently enabled Wyndham Rewards to launch what's being called as the industry's first co-branded debit card in the US, signaling a potential shift in how brands approach customer engagement through financial products. Today, Derek joins us to discuss how co-branded debit cards are creating new opportunities for brand and customer relationships, the unique challenges of building these products compared to traditional credit offerings, and what this means for the future of embedded finance. Welcome back to the show, Derek.
Zach, great to see you again, as always. Love what you guys do. Love how you tell the story and look into the future of fintech. So thank you for having me. Really appreciate it.
You're welcome. I'm excited to talk about the new launch, but at first I want to set the stage and maybe look a little bit behind us. You have been a part of quite a few firsts in the industry, having launched the first online digital bank in the U.S. You've had a great bird's eye view of what and view from within the trenches about how everything is playing out. Can you take us through, at a high level, how financial technology has evolved throughout your career?
Yeah, absolutely. I've been very fortunate throughout my career to be in the intersection of how human behavior and human interactions with technology and money have changed with the introduction of new technologies. It was in '96 when the internet met financial services. The first product went live on the internet, and we did 60,000 accounts in the first day and realized, whoa, this internet is
this is a thing.
This is new.
Mm-hmm.
First real kind of the first real online bank was in '99, and that was fascinating to be able to offer financial services on the internet without any physical branches. And to just see that how technology changed the opportunity to create new customer experiences. And when we did the first product, we created the user interface, which I now refer to as the above the glass experience, where the customer interaction with this interstitial banner clicked on a web form, and the web form was something that the customer could complete on this computer. Little did people know that in the back office, once the customer clicked submit, and yes, I want this card, then it went into the back office, and it was printed out in the back office and rekeyed into another system, because the systems below the glass, as we refer to it, or the infrastructure, didn't talk to each other back then. But yes, since then, I've been part of the teams that created the first mobile money service in Europe, the first fintech accelerator in Europe, and now have the privilege of leading a fintech in the United States and in Latin America that provides the infrastructure, the below the glass experiences, as well as the glass experiences for many of our clients.
One of the things we talk about on Tearsheet a lot is the future of partnerships and the ability for financial organizations to do that well and at scale. We do believe is a differentiated skill and something that will, I think, distinguish winners from losers going forward. How has your experience at larger organizations throughout your career, whether it's Google Cloud, US Bank, BBVA, Barclays, how has that informed your approach to financial technology partnerships?
Well, the combination of working for big tech and banking has been fascinating, and to see how the collaboration and the cooperation and at times the coopetition has created opportunities to create new experiences that can create new monetization models with new technologies. And that can be the financial institutions looking at how do we create the next new experience. And the next new experience we'll come on to perhaps in a bit is not just looking at how do they create amazing experiences on a mobile device or on the internet, but increasingly how do we leverage AI and blockchain and quantum to create the future of what will be human interaction with technology. And a lot of that is very much informed by understanding how people, how humans, how businesses interact with money. And that's informed from the experiences at US Bank and others. And so much of it led by the creation of world-class end user experiences on new devices. And it'll be really, really interesting to see what comes out of OpenAI and Johnny Ive and what that new device of the adoption of AI is going to look like. That'll be incredibly fascinating to see how the introduction of a new device, a new interaction model, can change the way that we interact with money. But then it's not just the interaction model, it's the technology that enables it that sits below that and ensuring that the ecosystem connects within the banks, within the big tech, within partners that enable those experiences will all be incredibly powerful as we move forward.
And that connection was what you said in your first answer, which didn't exist in the first generation of financial technology companies.
Absolutely. Now we operate in an open ecosystem where everything connects with, well, in many banks it still isn't the case, but in an ideal ecosystem, everything's connected by high-speed APIs that are open with the appropriate controls around them, enabling the exchange of value, dollars, money, tokens, whatever it might be, depending on the network and depending on the infrastructure that's being used.
Can you give us some insight into which types of consumers use debit cards the most and why?
Yeah, there's two primary reasons why consumers use debit. One is that they want to be able to build credit or they may not qualify for credit, so they may have a thin file. And the second is they just choose not to be able to expose themselves to credit. They don't want credit. They want to be on top of their financials and their financial life on a day-to-day basis and prefer the use of debit versus credit. It really comes down to a behavioral thing. But we also see various segments across the US, it varies around the world. But for debit profile customers, the younger generations are preferring to use debit more than we've seen perhaps in the past, and not wanting to build up a credit balance, and so we see the younger emerging customer base as an area of growth.
And as I alluded to in my intro, like co-branded credit cards have been around for decades, but co-branded debit cards are relatively new. Can you give us some insight into what unique challenges exist in creating this type of product?
Yeah, the opportunity is huge here, where we have customers that have a deep loyalty with a brand, and that they have maybe building up in a rewards balance with these brands that have existed with interactions with the brand, whether it's flights or stays or other interactions that they may have with the brand, and that they're getting rewards associated with that. That then is amplified through a co-branded credit card, and they've earned rewards associated with spend on a credit card for years. But the intersection of these 90% of the US population and 46 million people that don't have a credit profile, and so therefore are using debit or other forms of payment, but want rewards. They may be getting rewards, but don't have a payment mechanism connected to that. That's what we're doing through this co-brand debit offering that we've brought to the market, and it's incredibly encouraging. The biggest challenge associated with it is just a brand understanding their customer base and the opportunity to offer a new debit solution alongside their credit card solution, designing the value proposition and shipping product to the customer.
So if I'm a brand and interested in launching a co-branded debit card, can you walk us through the steps of what it would take like to work with the Galileo to launch such a product?
Yeah, so it starts with really understanding the customer, understanding how the customer interacts with payments on the brand. And what we see across many of the big travel and entertainment companies and brands is, and this was perhaps the biggest surprise statistic for me, Zach, was 30% of customers at the point of decision. We talk about the point of purchase, but it's really a point of decision when you come to the payment method you're going to choose at the point of sale, the point of
Hmm.
purchase. And at that point of decision, up north of 30% of consumers, when they have that decision and they pull out their card, are pulling out a debit card at these big brands, even though they're not getting rewards associated with it. And so the opportunity here is for the brands to understand what percentage of the spend and how are their end consumers interacting with their brand? How are their consumers spending on their merchant sites and on location? And then is there an opportunity to design a new solution, a new capability that would reach a population that isn't perhaps getting served today, that isn't deepening that loyalty, because interactions are the currency of loyalty. Interactions are the ways that brands can monetize their experiences with their customers. And understanding that it's a point of decision for a consumer at that interaction with the brand and the opportunity to monetize that and give rewards associated with it. That's the magic of what we bring together. We bring the rewards, the interaction, the experience all together through a seamless experience with our technology platform that connects the ecosystem and enables it for the brand and the consumer.
So I like the way you described that about the point of decision. And I think a brand figuring out the type of rewards or incentives is probably a complicated calculus, and it varies very much on and dependent upon their customer base. For companies new to the space in terms of launching an embedded offering, like how do you help them think about what types of incentives or rewards to offer?
It really starts with, and there are varying levels of sophistication of understanding the value of a customer interaction, the value of a reward, depending on the brand that we're talking to. Emerging brands that may not have the established 100 million rewards customers are at a different point versus a brand that's had an established rewards program for over 20, 25 years and really, really understands in incredible detail the value of their rewards program, the amplification that comes through partnerships that they have connected to their rewards program, and then therefore the value of those rewards in the open marketplace. So it's really understanding one, the maturity of the rewards program associated with it, and whether they'll be leveraging this new payments method to really build the rewards component and build the brand and build the connectivity there, or whether it's seen as an extension and an amplification against that. That's the starting point. And then as we understand that and we understand the ability to what is going to be the system of record and the master rewards program, then we can build a financial instrument, a financial product, the debit card to plug into that and feed into that while amplifying and increasing the number of customer interactions that the brand has, and therefore opportunities for monetization of those customer brand experiences. And that's a whole flow and experience that our team here at Galileo does. We work with these brands all over and at varying stages to help them design not just a debit card program, but it's a loyalty program. It's a customer interaction program and a monetization opportunity that we design in partnership with them.
I want to drill down a little bit on the Wyndham partnership, and it looks like it helps to illustrate the possibilities for hospitality brands looking to build deeper relationships with their customers. Are there other industries you see that might be ripe for co-branded debit innovation?
Yeah, and I have to say the Wyndham team has been fantastic. They leaned in and wanted to be first to market here. So from the moment we signed the agreement for Wyndham and had them live in market, it was less than 90 days, and they really wanted to design a value proposition that they felt resonated with their customer base, where again, a large percentage of their customers do actually use debit at that point of decision and point of purchase. We've seen not just Wyndham having significant interest in this space, but other travel and entertainment companies, other travel and entertainment brands. You can imagine who that might be that have large established rewards programs and want to add a debit solution to their offering to serve customers. That's a natural extension. But it's really any brand that wants to create loyalty and wants to create rewards and increase their interactions and monetization opportunities with their customers. It's really we're fascinated by the number of opportunities that have come in as we've announced this capability, and the industries and the segments that it carries across. But travel entertainment is the starting point.
That makes
But let's
sense.
just say there's interest across every segment right now.
And I'd have to imagine in competitive markets, once one competitor launches a card, their competitors are looking to do that as well. Like I have to assume there's some like sort of follow-on offerings there.
Absolutely. Yeah, you said it very, very well. With the launch, yes, there's been a lot of inbound interest. We were already engaged with many players in the space and brands in the space, but yes, it's absolutely increased the interest significantly.
Well, that's a good point though. As this becomes more ubiquitous, obviously we're just at the beginning of this of the rollout. I guess one of the ways that brands if there are so many competitors in the market with a similar product, I guess one of the ways brands can differentiate themselves is through the incentive programs, through the rewards programs, right?
Yeah, and especially in the United States, we're a rewards economy. We
Exactly.
love our rewards. We love our cards and rewards and the connection of that. It's so deeply ingrained into the psyche of every American. And finding ways to amplify our ability to earn rewards. And you've seen some announcements recently in the United States, and you've covered some of them, that the big brands and the big issuers have increased their annual fees because of the value that's associated with spending on a card. You get rewards, spend rewards, spend rewards. Well, that hasn't existed with the brand debit and rewards. It's
Hmm.
really simple. We've just brought that together. We're creating a value proposition that's unique, and serves a population that hasn't been served, and it's incredibly exciting.
I want to ask a question more about you and your career. We talked about, you've been on the financial institution side, financial infrastructure side, technology side. We're definitely seeing in our reporting we're seeing partnerships there, we're seeing co-opetition, as you mentioned, and we're seeing convergence in some cases as well. Like, how do you see like each one of those three distinct industries? Like, what opportunities do they bring, and so what are their advantages of get moving into the space?
Yeah, so the obviously the hyperscalers create a platform that enables technology that's incredibly exciting, and with the acceleration of AI, this is all changing dramatically. What we saw as need for traditional legacy systems has changed dramatically overnight, and ensuring that one, there's the scale that the hyperscalers provide, two, that there's the connectivity through open APIs for the exchange of real-time, instant information and data and connectivity of systems, and then the speed of money starting to move at the speed of the internet. That's happening. Whether it's over the blockchain and the advancements in the US market, allowing banks to essentially operate in the crypto space again, um,
Hmm.
and really opening up that opportunity is going to increase the speed and the flow of money. We've had RTP, we've had FedNow, and now with there's going to be really real excitement over the coming months on the speed of money moving and the use cases that evolve with that. So with the combination of the scale, the speed, the security associated with that, it's pretty exciting.
For companies or brands, considering moving into offering a co-branded debit card, what kind of advice would you give them as they're beginning to explore that journey?
The advice would be start with customer. Start with understanding the
Mm.
customer, starting how the customer interacts with you, with the brand, starting to understand the value of the customer and what the customer wants in way of interaction and reward for that interaction. And then give us a call and we'll sit with you and we'll help you design a proposition and a value that can be delivered to the customer, whether it's through debit, whether it's through any payment mechanism. We can enable that and allow for the creation of a really exciting value proposition that resonates for the brand as well as for the end consumer.
I want to shift our vision towards the future in the remaining time that we have. I'm curious what emerging technologies you see might have the biggest impact for branded payments experiences going forward.
I'd have to say the big three are going to be number one, AI.
We haven't
Number
had a conversation on this podcast for the past 18 months where everyone's spoken about Gen AI, but yeah, I agree.
Yeah, and there's some really, really powerful use cases that are live today beyond just um, AI replacing initial coding, which is pretty basic as of now. But it's obviously, and I kind of touched on this previously, but it's AI, blockchain, quantum, the combination and convergence of those in immediate opportunities, and the way it's going to change the way money moves throughout the ecosystem, and the intelligence of the speed of money. That's probably the biggest thing. The intelligence of the speed of money is going to be changing the way that payment infrastructure works. And as payment infrastructure works, brands working with that new payment infrastructure will influence the interaction of the customer or the consumer with the brand and the speed at which that payment infrastructure is changing. That's going to be really, really exciting.
I really like how you said that. I appreciate that, the intelligence of the speed of money, because it's not just about the speed. There is now an intelligence layer once all this stuff becomes interconnected and interoperable, right? It unlocks a lot of use cases that wouldn't have. It's not just about speed.
Yeah, if you just take the example I gave at the beginning, in the early on when the internet met money and consumers, it was disconnected systems. And we've been operating in a payments network where money moves, but the intelligence and the data associated with that payment may not be as tightly coupled as they will become in the future because of the new payment methods and AI wrapped around those payments. The convergence of intelligent payments at speed is going to happen. And when you bring that together, that's going to be amazing.
Derek White, CEO of Galileo Financial Technologies. Thank you for joining us on the Tearsheet podcast today.
All right. Awesome. Thanks, Zach.